late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today we're going to jump back into the macro side of things. Yesterday we did finally get kind of some more certainty around all these tariffs. We did get a very extensive list, essentially just almost tariffs across the board for everyone. So kind of varying depending on the current administration's perception of how they're being tariffed. So we'll get into that in a second. But basically, we're going to flip over to the chart over here, or the table that's going to break down this for us. So we'll take a look here. We just see, ultimately, looking at this, we see this is the table of reciprocal tariffs. I'll zoom in on it for you just to get a better idea here. So we can see, essentially, from the top down, we've got China here with 34% tariff. Looking at European Union, 20%, Vietnam, 46%, Taiwan, 32%, Japan, 24%, India, 26%, South Korea, 25%. Kind of just going down here across the board, you see the different the different proposed tariffs here, and then this is actually the tariff that the Trump administration is claiming is being charged to the U.S. You can see here it says including currency manipulation and trade barriers. So there's a little bit of ambiguity around that rhetoric, in my opinion. They're not really they're not kind of showing how they're actually calculating this currency manipulation and these trade barriers, and it could just be a tactic to kind of make the other tariffs look worse so that his reciprocal tariffs, or what he's calling reciprocal tariffs, don't look quite as bad. So we can essentially see that the Trump administration is the one defining this, so we need to take it with a grain of salt. You know, if a certain political party is defining something that they're trying to sell to their citizens, trying to sell the tariffs as kind of a bullish or good best case scenario for the economy. That being said, we made a video on this back on February 1st. The stock market was 0.5% from its all-time highs. All we did was look back at history, look at the data that on how these tariffs, how these trade wars affect the stock market, and how they affect consumers. So what we found is that generally the cost to import is increased. That cost is then passed on to the consumers, which can spur inflation, and then ultimately also affecting the consumers at the end of the day, because they now have to pay substantially more for the same goods because there isn't the domestic capability of replacing this foreign manufacturing right now. So that's what a lot of people aren't seeming to understand. I'm totally for bringing back more manufacturing, more resource processing within the house. As a Canadian, I think we give up a lot of our resources to be essentially refined overseas or internationally. We should be refining these resources in-house, building the jobs domestically and our domestic economy. That being said, I also recognize that we don't really have the infrastructure in place right now to be able to do that, and that's going to take years, if not decades, to establish. So what they should have done was take a gradual approach, maybe putting in some lower tariffs initially, and then really look to start kind of transitioning that industry back to the domestic side of things, rather than just kind of throwing all the tariffs out there and then hoping that you're kind of going to get your way. At the end of the day, though, we do recognize, we just follow the data. History has basically history tells us everything we need to know. There's the data there. We can go back at this point in time. If you're taking what a politician tells you at face value, you know, you're just doing yourself a disservice. There's so much information, there's so much data and tools available to us to go back and look at prior examples of this in history and how it affected the markets, how it affected kind of that consumer dynamic, and then we can make a decision based on data rather than trying to listen to politicians. Because if there's one thing I've learned, politicians are going to lie to you. You know, you can't trust a politician, you can't trust a billionaire. What do you do when you put them together? We definitely don't trust them, so we just follow the data. Basically, yeah, we can see though, we don't really know what the total breakdown is and how they're coming to that calculation to include currency manipulation and trade barriers. So we'll take it with a grain of salt. We're going to see how some of these countries react. We did see that China, Japan, and South Korea did all agree to jointly essentially retaliate to the U.S. tariffs. So we see them as three of the harder hit economies here in terms of the tariffs. So we'll see how they're going to react. We see Canada, they've said that they want to continue strengthening their trade relationships with other partners outside of the U.S. They are willing to drop their tariffs if the U.S. drops the Canadian tariffs. So we actually don't see Canada on this list. We also don't see Mexico, which maybe leads me to believe they came to a little bit of a kind of ceasefire in terms of the trade war, just postponing the tariffs again. We've seen Trump do this multiple times to Canada and Mexico. So we'll just continue following it. But that being said, you know, we have major Asian economies here joining together, saying they're going to collectively retaliate. This is what I said when I did my video here back on February 1st. So we talked about this. The stock market was at those highs. Everybody just kept saying how tariffs were going to be bullish, how it's going to bring more money into the economy. All we had to do was look at the historic data, and it said the exact opposite. The stock market is now down about 12-13% from the highs. Bitcoin dropped like 30% from its highs. We protected ourselves from that downside, and we allowed ourselves to be better positioned to buy more assets if this turns into a larger correction. So we'll continue to follow along. This isn't going to blow over in a few days. We're going to see how these countries retaliate. You know, I don't expect the European Union really to just roll over and take it. Same thing with China, Japan, and South Korea joining together. Also the UK here. So just big economies. We'll see how they're going to react. But ultimately, if you follow me, you're not surprised. This is exactly what we are anticipating. So what we see here, we're going to start here on the VIX, that volatility index that I was telling you about. I've been saying watch for those spikes up to that 30 range. That's really going to put downwards price action on the SPY. That's exactly what we saw here. That spike up to 30, coming in, holding the higher lows on these macro uptrend moving averages, which are turned up. And then we're back up towards that very volatile area again, seeing that sharp decline in the SPY, down 3.5% today. So that's a massive drop in the SPY. We see the NASDAQ down about 4%, the Dow Jones 3.2%, and we actually see the IWM here down 5%. So even performing worse than all its big brothers here. That's kind of that more worrying signal in my mind. If we had the SPY and the NASDAQ and the Dow Jones lagging a little bit, and then the IWM actually playing catch up, that's kind of a more bullish sign to me that the market might be looking for that reversal. Continuing to see small cap stocks really underperform is that kind of more recessionary narrative, or that more economic pressure in terms of kind of the downwards price action here. We've kind of lost our 200-week moving average. So what we wanted to do, we do have support right through here. You can see a little bit of support in through here. So if we lose $190 for the IWM, it's really not going to be a good look. It kind of supports that further broad market correction. That's one of the things we talked about, one of the canaries or the weak links in the chain currently. So we've got this confirmed death cross. If we look at our SPY and our NASDAQ, we don't have that confirmed death cross yet. So the IWM is actually underperforming to the upside, and then kind of underperforming to the downside. So when we dump more, and when we pump, we don't pump as much. So that tells me that all the liquidity is concentrated in a handful of names. That's what we talk about, the Mag 7, really making up the majority of the stock market gains that we've seen on this extended rally up through here. So that's just what I wanted to kind of showcase to you guys. This is where we made our video, where we were worried, where we de-risked, and then look at that, 0.5% from the all-time high. Just in recognizing, so if we look at this, I'll show you just what we were kind of looking at in terms of what was a worrying signal. We had our uptrending price action here. This was lost, so we went into our downtrend here. The trend has reversed, and then we came up here. This is where we had our bearish divergence of the RSI. So bearish divergence, we came here, we put in this lower high here with a bearish engulfing candle, and then we had a 3 outside down candlestick pattern. So I talked about those candlestick patterns where you get a bearish engulfing one, and then you get a secondary large candle outside of the first candle closing below it. So that's what we had, that bearish signal. And then we also, if we take a look at our different momentum indicators, we will see some more bearish signals there. So I'll take a look at our MACD, our DMI, and our RSI here. So taking a look. Basically, what we saw right at the top, right there, we saw that DMI negative line getting above the positive line. So we see the bearish momentum has built in through here. We got a bearish cross of the MACD with our histogram flipping over, and we had a lower that RSI divergence here, bearish RSI divergence. So we've got 3 bearish signals on our indicators. We've got a bearish candlestick pattern. We've got kind of more of a bearish price action pattern, enough signals for me to de-risk. You know, I'd rather be out here, wait for us to either confirm that price action to the upside and get in a little bit higher, you know, maybe 1% higher than what you sold at, but you're mitigating that risk. But this is what happened though. We pushed a little bit higher, lured in a few more late longs here, and then ultimately just dumped out, and it's just been down pretty much since, with a couple little relief bounces, but just to lower highs and lower lows. And if we take a look off the current highs, we are now down, sorry about that, we're probably down about 12% or so, yeah, about 11.5% to the current price. We're going to take a look at the dollar here. The dollar is breaking down as well. So pretty interesting. We see the dollar, the US 10-year. We see all the major indices down. We see gold down, silver down, oil's down. Nat gas is pumping today. So pretty interesting. Perhaps nat gas is kind of pumping due to that inflationary narrative. If we see inflation spur, and then we might see that rising cost in terms of kind of what people need to heat and cool their homes. But we do see oil coming down quite a bit as well, right back to that trend line. So that kind of relieves a little bit of the inflationary pressures as well. Gold here still holding really well, but that is a very bearish topping looking candle right there. So paying attention to gold. Gold might be due for a bit of a retracement, kind of what we might have seen similar to over here. You know, just on all these breakouts, gold just had to go on these sideways consolidation patterns. Same thing in through here and in through here. So gold continues showing strength, but it is down today as well. Silver down 5%, you know, coming back. So we had this inverse head and shoulders pattern. It's now negated. We've broke back below the neckline here, so we almost got to our target, but not quite. So not fully playing out. So nothing to really see there. I'm going to take a look at the NASDAQ, down 4.3%. So look at this, coming back up, back testing into the 200-day moving average and into this trend line. Huge rejection, coming back down. That's that bearish downtrending price action that I talked about. We see the MACD flipping red. We see bearish momentum building on the DMI, and we have a confirmed bearish cross on the RSI heading down. So the the NASDAQ right now doesn't look good in my opinion. I think it can still bleed more. We're just in downtrending price action, looking like we're heading for that bearish cross of the 2 moving averages. Just note though, when we do get this bearish cross, we might get a little bit of a relief rally, but it's hard to say where that's going to top out. We might get a push back into the 50-day, or we might get that 200-day getting above the 50-day and then getting a push up into this trend line, but maybe continuation to the downside. You know, markets are just looking really weak right now. When we see all the risk on assets not doing well. TLT up for the day. Looks like it's right at the 200-day moving average. If we can get above our 200-day moving average here and hold it as support, that's going to be very bullish for TLT. It's not going to be very bullish for our other assets because that's generally a signal of that risk off environment. We'll flip over here. Let's take a look at Bitcoin really quick here. So under 82,000. Look at that. We got up to our 50-day moving average again. This is what I'm worried about. So I showed you the prior cycle price action. We'll take a look again. We pretty much see here that we came up, so we had our 2 major extensions right here, 2 major extensions, and then look at this, we broke below our 50-day, swept below the 200-day, retested the 50-day, rejected, and then we broke below the 200-day again, and that is our bear market downtrend. So what we've seen right now, we've gone up, we've swept below our 200-day moving average, we pumped up, got rejected by the 50-day, back below the 200-day, consolidating underneath the 200-day. We are in this bearish wedge pattern, which is broken to the downside. We're headed for that confirmed bearish cross, that death cross, and we're stuck under these key moving averages. So Bitcoin really needs to show some strength kind of in the coming months, weeks. We need to see it break back above this 92, kind of 88 to 92,000 level, get back above these key moving averages if we're going to talk about another leg up. To me, right now, looking at all the high time frame indicators, looking at how the stock markets are looking, and I can't really just buy into anything here. I'm going to look at potentially building a swing trade again. So previously I built a swing trade. I had a cost basis under 82,000. I started buying, I started nibbling in at 84 and then all the way down to 81. And that's where I just kept adding, kept bringing my cost basis down. We ended up selling that. So we ended up with 50% profits on that leveraged position, or just 5% spot, but still a quick little swing trade, making a little bit of extra money, capitalizing on that move, and then booking the profits, getting out, and then getting ready for the next trade. So looking at a potential, if we go to 81,000 down to about 77,000, sweeping these lows, I'm going to look to build a swing position in here, and then ultimately looking to capitalize on a relief bounce. And then as we start to bounce from those zones, you start moving your stop loss up into profit, protecting those profits and that position, making it risk free. So Bitcoin right now, not really actionable in my opinion. Again, I'm waiting for lower prices to start accumulating, or I'm waiting for more confirmation of the trend. We'll take a look at Bitcoin dominance, continues breaking out here. Look at this huge breakout, guys. Just bullish price action across the board. We're at about 63% for dominance. If we take a look at our momentum indicators, bullish cross, we still have room to run a little bit here, but we are losing a little bit of momentum on the DMI. We'll see if we can pick that back up, but Bitcoin dominance looking really good. So altcoins are going to be bleeding, Ethereum's going to be bleeding here. Looking at that, we got 1769. So again, my target for Ethereum, I'm looking to start kind of DCAing in under $1,600 down to about $1,200. That's going to be my target range. We'll see, but I'm going to be only entering small amounts. If I start to DCA, again, they're just small buys. I'm not looking at putting any substantial amount of money into the market until we get that confirmation of the bottom and trend to the upside. So just remember that DCAs are small. Generally, if you can use recurring income or steady income to fund those purchases, the better. And then really work to build a cash position to be able to take advantage of larger retracements. Looking at Ethereum, Bitcoin, it's at new lows, guys. So this is what I talk about. Everybody says, is talking about, why would I try, and I'm never going to time the bottom. I might as well just DCA in all the way down here. But you know what? People have been saying that since 0.05 ETH Bitcoin. So right here, a lot of people assumed this was where we were going to reverse. They thought, it can't go much lower here. What are the odds? I'm going to just swap here. And then look what happened. Ultimately, just bleeding ridiculously lower. If we go from our 0.5 level to the current area, that's down 60% or 57.5%. So that's why when I talk about not buying a falling knife, this is a falling knife. I'm not interested in buying this until it's durably bottomed on the high time frame and reversed, because it's not worth the risk. So if we take a look at the weekly chart, it really removes the noise. That's why when I say make sure you have confirmation on the weekly chart before you're actually, at least on the daily chart, you need to have really high confirmation and strong conviction with a good setup on the daily chart. And you're still going to likely enter with a little bit smaller size than if you were entering on weekly confirmation. And when we look at the weekly chart, all we see is just downtrending price action. So it's not that interesting. We'll take a look at total 3 here. So what we did get is, I've seen this shared previously before too, is people talking about a cup and handle retest. I argue this cup and handle and retest is already played out. So this is the cup that we had. This is the handle consolidation pattern. This was the breakout. This was the retest and entry. And then we fully played out that measured move. You can see from the low to the right of the cup, we had $500 billion move in the market cap. And then from the breakout to the high, we actually exceeded that with 573. So we actually did kind of outperform and meet that measured move target for the cup and handle. So we're going to continue watching. If we take a look here, we'll take our Fibonacci from the swing low to the high, currently just around that 786 level. So potential for an entry or a DCA. That being said, you guys know my thoughts on falling knives. Not interested in buying until we have that confirmation to the upside. I do think there is a possibility we continue lower. This could be a bear market or a left translated cycle if the macro environment does not improve. So that's kind of my main point, is regardless of what Bitcoin indicators are saying, crypto indicators, if the SPY and the NASDAQ and the Dow Jones and the IWM cannot move up and they continue in these downtrends, I don't think any of these risk assets are going to follow. The Bitcoin's current correlation is higher to the NASDAQ than it's ever been in its history, which means the market is treating Bitcoin as a tech stock. It's not treating it as digital gold, although I do agree with some fundamental characteristics that Bitcoin has as digital gold. It's just too young, too new, too early of an asset to be kind of valued by the market that way, and that's why it's correlated to the NASDAQ. So altcoins continue kind of in their downtrends here. We see we're losing our lows on the low time frame. Bearish cross here confirmed. So as long as we can hold these lows, that's going to be the first step. Otherwise, we'll have to continue to go to those lower targets. The 786 might come in play then, in which case look for the confirmation. Again, we're not buying into these falling knives, or if you are, just know that DCAing is fine. Just remember, we can go lower, and you need to be willing to hold the assets that you're dollar cost averaging for potentially years. So just remember that. Others dominance was in this wedge we are watching. It's now broken down, back tested, rejected a second time, and in falling knife status. So again, everything's kind of just downtrending, you know, not too interested in much. We're just going to wait for the markets to tell us what the likely move is. We see the SPY just coming down even more, so almost 4%. This is a pretty bloody day in the markets. You know, I haven't seen a ton of drops like this since kind of every few months, years. You know, it's pretty crazy. And to see just subsequent drops and then just no relief to the uncertainty. You know, it seems like there's just more and more volatility every single day, and we haven't even had the retaliation announcements yet. So just remember, guys, we're not in a rush to go into anything. The market does not, although it looks like a V-shaped recovery, this took place over a couple months, and the entry into the market is not that much different. So just remember, it's better to wait for confirmation, enter on that confirmed trend to the upside, and then be able to take advantage of those swings rather than buying and resistance and ultimately bleeding to those lows. So thank you so much for watching, guys, and I'll see you in the next one.